We spoke very briefly in a previous video about real-world tokenization projects, and today we're going to take a look into exactly what this entails, how the tokenization process works, and why this could be a huge narrative for the upcoming bull run. First, let's dive into what is the tokenization of real-world assets. So in the land of blockchain, the representation of real-world assets through tokenization offers a blend of digital innovation and physical ownership. So rather than physically holding the deeds or the titles to your property, the intricate details of ownership are securely stored on the blockchain as digital tokens. It's like having a digital fingerprint of your assets, easily transferable and verifiable in just a few clicks. So if you imagine your home now, maybe you're probably a little bit more organized than me, but literally all of the paperwork related to the house I have in a folder in the cupboard, and I'm not too sure what really happens if you lose these papers, but I do imagine that it would be an absolute headache. So instead of stacks of paperwork which is tucked away in a drawer, the essence of your property ownership is encapsulated in a digital token which is held in the blockchain. So this not only streamlines the process of transferring the ownership, but it also adds a layer of transparency and traceability which ensures that every transaction is recorded securely. But does this mean that everything that you own can be tokenized? So technically speaking, yes, it does. However, it's more practical to tokenize assets that have significant value in the secondary market. So for example, you maybe have a photo album that maybe holds immense sentimental value to you, but its tokenization might not hold much appeal beyond your own personal sphere. So on the other hand, if you have a collection of, for example, vintage stamps or rare coins, people do collect these things, you're more likely to find a more vibrant market among enthusiasts which are eager to trade in these treasures. So in essence, through tokenization, the intersection of the physical and the digital world now offers a new novel way to authenticate the ownership and revolutionizes the way that we perceive and transact with our real world assets. So we do have two types of real world assets, some of which are absolute no-brainers, and this is broken down into both physical and non-physical assets. So physical assets are, for example, real estate. So even modest properties in rural areas tend to signify wealth and good investment potential. And there is, of course, artwork. So paintings, sculptures and pottery, they all hold aesthetic and financial value and are sought after by collectors and investors. And there's also commodities, which is things like gold, silver, and also agricultural products. And another one that is quite obvious is jewellery and heirlooms. So these items carry sentimental and financial worth and obviously represent heritage and tradition. And then we have our non-physical assets. So treasury bonds, especially the US ones because of the dollar being the world's reserve currency, and also debt. So this can be an individual's debt, but it's more likely to be like an institutional debt from companies, and also shares and stocks. So these are just a few examples to try and kind of explain it a little bit better. So I've tried to break down how the tokenization process works as simply as possible. So real world asset tokens follow the ERC 3643 standard, and these are different from previous token standards like your ECR20 and ERC 721. So they are permission tokens, meaning that eligibility as a token holder is determined by predefined conditions in a smart contract. So this standard also includes on-chain ID, which is a decentralized identity framework, which is quite similar to an on-chain KYC, which I think most people are quite familiar with. And this is to verify token holders' identities. And this framework follows the issuance, management and transfer of RWA tokens while ensuring compliance with regulations. With RWA tokens, token issuers can easily track the ownership changes, which saves time, resources and paperwork. So the streamlined process benefits industries like insurance, reducing the wait times for claims processing and improving efficiency. Tokenization standards like ECR 3643 are crucial for ensuring an orderly transition of real-world assets to on-chain digital infrastructure. So they provide safeguarding and promote usability, similar to how ECR 721 boosted NFTs and the ECR20 facilitated DeFi. Originally named the T-Rex protocol, the ERC 463 proposal was introduced on July 9, 2021 by Joachim Liebram, Tony Malgheim, Kevin Fizzy, Luke Philpim and Adam Bojema. So since real-world asset tokens are security tokens, they must comply with regulations. governing their usage differently. So the token standard builds upon the ECR20, but includes additional functions to meet various regulatory requirements. There are some pros and cons of this that we're going to go over. So some of the benefits of RWA tokenization is that it enables partial or fractional ownership of real-world assets. So for example, this could be owning fractions of famous artwork or shares in a company. And it also provides retail investors access to investment opportunities, which would traditionally be reserved for institutions and the wealthy, which does start to narrow the wealth gap slightly. And small businesses can also use tokenization to raise capital globally, which bypasses traditional funding limitations and establishing an on-chain credit profile. It also allows investors to gain the ability to invest in businesses in other countries and promotes global investment and potentially bypassing corrupt systems. And issuers can set conditions on asset saleability and types of investors, adding flexibility and control to it. And finally, additional advantages for this include transparency, efficiency, and ease of ownership transfer, similar to the benefits that we tend to see with NFTs. Now, like with anything in life, there are obviously downsides to this, but with RWAs, these can be a little bit more complex. So there's obviously the issues with fractional ownership. So for example, with artwork, owners of fractional shares may not have physical possession of the artwork and must agree on display arrangements. And also, if it turns to fractional ownership of real estate, for example, with housing, complications tend to arise regarding occupancy, rent collection and mortgage payments, and would require clear terms at token creation. Also the investment risks, so tokenized assets can be used as collateral for gambling, which obviously requires a lot of caution to be used with it. Now with regulatory and legal risks, there's existing rules for tangible assets and these may not fully apply, which does require careful adherence to evolving regulations. And with operational and market valuation, mismanagement and delays can obviously impact tokenized assets' performance. So valuation methodologies and liquidity conditions may pose quite a few challenges for this. And then there is the oracle risk. So oracles are vital for real-world data integration, but they can also be very vulnerable to attack. Now, there is one platform that I do find particularly interesting in this narrative, and this is Realo. So Realo is developing a DeFi platform that is scalable, user-friendly, and compliant. So this is catering to both digital and real-world assets, such as private equity, real estate, and bonds. So it was founded back in 2018 by Derek S. Boylan as Chief Executive Officer and Aaron Gooch as Chief Technology Officer. And the Realo Network laid out its vision and objectives in a white paper which was released in March 2020. So since then, the team has diligently worked on enriching the platform by integrating several significant features. These include the establishment of a decentralized exchange for smooth trading, the introduction of an effective financial planning platform, and the development of a robust set of report and analytic tools. So these enhancements serve to bolster the capabilities and services offered by the Realo network. So the native token for this is the Rio coin, and this serves as the native token of the platform, which was introduced through a fair launch process without any ICO or pre-sale. And it operates across multiple blockchains including ETH, Algo and XLM, and has a maximum supply which is capped at 75 million tokens. So Rio is used for all fees on the platform, for governance, staking and for land sales in the Realoverse, which is a real-world themed metaverse land, and purchasing land from this removes Rio from circulation. So Realo has outlined several future expansion strategies which include network expansion. So it's currently in its beta phase and is only accessible to a limited user base. However, plans are underway to broaden its availability, allowing more users to utilize its features and services. And while the platform presently focuses on real estate tokens, there are intentions to broaden its capabilities to include additional asset classes, and this expansion will offer users a wider array of options for tokenization and exchange. And currently, Realo Network's availability is confined to specific markets. So as we can see, it isn't available on the more common exchanges such as Binance and Coinbase, etc. However, they do have expansion plans which aim to penetrate new markets such as the United States, Europe and Asia to establish a more global presence. And I think that once they do this, we can see expect to start seeing it on more exchanges. So Realo actively pursues partnerships with real estate and financial firms, and through collaboration with established industry players, they seek to enhance the visibility of the network and drive wider adoption of the Real token and platform. The tokenization of real-world assets represents groundbreaking opportunity for the cryptocurrency markets. So by increasing accessibility, enhancing the liquidity, and fostering innovation, it has the potential to revolutionise how we invest and interact with assets. So with transparency, efficiency, and the ability to reach global markets, this transformative technology is poised to reshape the financial landscape. So as we look ahead, we should embrace the potential of real-world asset tokenization and unlock new possibilities for financial inclusion and prosperity in the digital age. So let me know what you think about the RWA narrative as a whole. Do you have a favourite project in the real world asset space? Let me know in the comments below, and I will see you next time.